This week's number, $2,600. That's the average resale price for a ticket to Lionel Messi's Inter Miami debut next month. This is going to be tough for him, Ed. In Paris, you go to the bathroom and you piss. In Miami, what do you do in the bathroom? Cocaine. That was good. That's good Miami humor. Ed, welcome to Prof G Markets. Today we're discussing the housing markets, or the housing supply rebound, FedEx and UPS, and Adobe's AI hype. Here with the news is Twitter legend, is emerging Twitter star and influencer, Ed Elson. Ed, what's going on?
Not much, Scott. I want to hear everything about Cannes. I've seen all the pictures, and it looks incredible. What have the highlights been?
I hung out with the cast. Well, let me back up. So, first off, nobody stops me. Everybody stops me and says the same thing. It's kind of my mecca. I'm legitimately a B-list celebrity there. So I'm sort of like a Kathy Griffin, or I don't know who's a B-list celebrity. Like, you know, the guy that was on that 80s show but got replaced after the second season. I don't even know if that's a real person. But I get stopped and people say the same thing. One, where's Kara? And two, what about the Hawks? I did a big thing on how I'm staying at this hotel called Hotel du Cap, which is lovely, Ed. And they used to have these guys come out and take the hood off a peregrine, I think it's called, a falcon, and it would kill a seagull. No more seagulls. For 2,800 euros a night, they have now these ceramic owls that the seagulls don't appear to be too scared of, as I saw one humping one of these things. In addition, I had a seagull, no joke, fly around. I was filming it, and then come on my table and take a croissant. So you almost had a professor like leap out of his chair and try and strangle a seagull because after stealing my 18 euro croissant. But it's very for all the stuff about Europe being socialist, it's more stratified here at Cannes than any place I've ever been to, and I'll use as an example. So yesterday, I thought, okay, it's my last night. I've partied for a couple nights. I'm just going to go back to the hotel, take a sleeping pill, i.e. edible, watch some Netflix, and fall asleep. And because I'd worked out, I became ravenously hungry. So I went down to the Croisette, what they call it, the Croisette, the Palais, and I walked along trying to find food. But all the beaches are sponsored beaches. There's the Microsoft beach, the WPP beach, and I basically tried to find someone somewhere that recognized me such that I could go into their beach club and eat food. And Spotify loves me. I've made friends with the folks at Spotify, and they let me in. And I had about 9 chicken burgers. So there's the main area for Spotify while watching the Foo Fighters, which was really exciting. And then this woman came up to me, recognized me, and said, "Oh, Scott, Professor Scott, it's so great to be here. Do you want to go to the VIP area?" And I'm like, wow, there's a VIP area? And I'm not someone who spent a lot of time in the VIP area of clubs, Ed. I know that sounds hard to believe.
Yeah, I don't believe that. But
so they put this silver band on me, and I go to the VIP area. Very nice, on the beach, even hotter people, and what appears to be nicer, younger people bringing me my drinks. And then I say, can I go to the bathroom? I'm like, well, the only bathroom here is upstairs in the VIP room. And they get me another band. I go up there, yes, and I hang out. Hang out with the cast from SNL. I posted a picture. That was really fun. They're all super nice. And they're all like 17. They're so young.
Did they know who you are?
Oh, no, they could give a shit.
No way, right?
No, absolutely no idea. But they assume I'm rich, so they're nice to me, thinking I might that my wife might produce movies or something. So
professor,
yeah, they're very nice to me. I took a picture of them, and then out of nowhere, these huge guys come along and set up another rope for the VVVIP, and then a woman who looked like she was about to literally give birth comes rolling in, and her and her posse, and it was Rihanna, because I guess Rocky ASP.
No way.
Yeah, wow. So I hung out with the SNL cast. Oh, yeah. Yeah, Rihanna absolutely is a huge fan. So I hung out with the cast of SNL and a very pregnant Rihanna. So that was my night.
That is really cool.
I got up, had breakfast with the SNL people. That's a lie. They didn't invite me to breakfast, but they were in the same room as me. And when I said, "Hey, everybody," they looked up at me. So they didn't say hi back, but they did look up.
Nice.
So that's like having breakfast with people from an SNL,
counts.
and then I took a car to the airport and I got to Ibiza about
Nice.
an hour and a half ago, and I'm staying at the Nobu Hotel. I'm staying
Wow.
at a hotel that charges several thousand euros a night because they serve amazing sushi.
That's right.
So yeah, I'm
And
the
VIP
I'm literally the
bands.
douchiest douche in Doucheville right now,
Yeah, that's
Ed.
pretty good. Are you going to go clubbing?
No, I'm going to a villa party. If I go into a club in
Check.
Ibiza, I could slip and break a hip. Yeah, no, I don't do that.
Good
I don't
stuff.
do that. Anyways, let's break it down. What's going on with the news, Ed? Oh, first off, so you had about 8,000 likes, which validates you as a human on Twitter. And
More than
talk a
that.
little bit about it. I'll talk about it. You said that Governor Newsom put on a masterclass in debating and communication. And the reason I do think this has a link to the markets is I believe the markets, because the majority of companies that now go public are not profitable, is about storytelling. And part of storytelling is engaging in an active conversation and sometimes debate. And you broke down how Governor Newsom was incredibly deft in terms of him pushing back on Sean Hannity of Fox News. So anyways, over to you, Ed.
Yeah, I mean, I think the greatest thing about that interview, and everyone should check it out, just Google Hannity Newsom interview, because he just completely dispels this Democrat narrative, which in the past has held some weight, and that is that Democrats, when they debate and when they talk about issues, they're too driven by their emotions, and that's sort of the big conservative criticism of the left. Is there's that Ben Shapiro quote: "Facts don't care about your feelings." And there's just this feeling that we're sort of swept up by the emotional side of debates and that we refuse to look at the data, which, sometimes is true. The majority of the case, it's actually not true. But this is the perfect example of dispelling that narrative, because you look at this interview and Governor Newsom is literally a human spreadsheet. I mean, he has all of the data in his head and he just pulls it out seamlessly. And there are all these examples that we could go through. I mean, Hannity points to inflation, for example, which we've talked a lot about on this podcast, and he blames Biden for it. And he says it's a result of reckless, liberal fiscal policy, that we're spending too much, and that's, driving prices up because there's too much cash in the system. And then Newsom makes the point that actually this is a global issue. You have inflation way higher in all of these comparable nations, in the UK, in Germany, in France, in Italy. And he makes the very simple point, using data, it's an informed response, that actually, if you're going to look at inflation, you're going to talk about macroeconomics, you have to look at our country in relation to other countries. Now, I could literally go on for hours about how great he is. They get into employment, immigration, budget deficits, all this stuff. But here are just some main takeaways. And I want to be clear, I'm not a Newsom supporter. I just think that when you look at what he says and the way he debates, it's inspiring. So the first takeaway is that, one, in a debate, you should always let your opponent make their full argument. And I feel like recently people feel like in the Trump era that there's no space to do that because Trump will interrupt you, people interrupt you. But Newsom shows that if you let someone make their full argument and you don't blindly disagree or agree with them, you listen to the full analysis, you gather all the data, you synthesize it, you can actually use that to build your argument. And the best part is that you'll be rewarded for it. So if you look at the Fox News comments on the YouTube channel, literally all of it is, wow, I never respected Governor Newsom until now. This guy has a point. This guy took Hannity to town. And he benefited from letting Hannity make his points. The second thing is, it's very powerful to own your mistakes. There are a lot of times when Hannity pointed out the issues that Newsom has had to deal with, for example, homelessness. And I think he set it up expecting Newsom to say, no, that's a lie. You're framing it wrong. I don't agree. Instead, Newsom just says, it's a disgrace. Full stop. He says, I own this. And it's so rhetorically powerful because it builds credibility and trust in Newsom that he's actually looking at the facts. And then it brings up this point, which is you should think of every mistake that you make as an opportunity to own up to it. Everything that you say and you get wrong, the next time you discuss that issue, it's a good thing to say, yeah, I got it wrong. And then the final point I'll end with is it is the number one job that Newsom exemplified of any leader, whether you're in business, whether you're in politics, whatever field you're in. you have to know your shit. If you don't personally believe that you know your shit, then you should be, one, you should remove yourself from a position of influence because you shouldn't be there. Or two, you should do everything in your power to amend your situation. You have to know all of the facts and all the nuances of the facts to be a decent fiduciary to constituents, to your shareholders, to whoever it is that you're representing. So in sum, I'm not an expert in California state policy. I'm not an avid Gavin Newsom supporter, but from a debate perspective, bravo, Gavin Newsom.
Anyways, Ed, speaking of knowing your shit, talk to us about the headlines.
Let's start with our weekly review of market vitals. The S&P 500 was down and Bitcoin rallied. Shifting to the headlines. UK rents rose 5% last month, the highest increase in 7 years. Virgin Galactic will send 3 members of the Italian Air Force on a space mission this week. That's the company's first revenue-generating space tourism flight, and the stock popped 50% on the announcement. OpenAI is considering launching an app store that would allow people to buy and sell customized AI models. Tesla stock sank 6%, its worst drop in 2 months, after a Barclays analyst said the stock is overvalued. Having said that, Tesla is still up around 135% year to date. And finally, SoftBank founder and CEO Masayoshi Son gave his first major investor presentation in more than 9 months. He said he wants to lead the AI revolution and added that the firm is, quote, ready to shift to offense mode. Over the past few years, SoftBank's Vision Fund has hemorrhaged billions of dollars in its venture investments. Scott, do you have any thoughts?
Yeah, so the UK is really, I mean, as you pointed out, Governor Newsom said, with respect to inflation, who's doing it better? The reality is our inflation is now sub 4%, and the UK is still struggling with, I believe, 8+% inflation, and their rents rising. I mean, we keep talking about this, but they somehow figured out a way to decrease productivity while increasing their costs with Brexit. So it's stagflation, whatever you want to call it. It's the worst of all worlds. I think Virgin Galactic is really interesting, and it popped when they announced they were about to commence their commercial flights. So one of the biggest stories that's sort of gripping the world is this submersible that is lost, or at least at the point of this recording is lost. And I think this is going to raise just a ton of issues, a lot of them philosophical, and what it means to, what is, quote unquote, responsible versus irresponsible exploration. You know, this is, and I don't mean in any way to make light of this, this is a tragedy. I think that this is the end of Virgin Galactic. Because what I think it will point out is that just because you're wealthy doesn't mean you should make these types of irrational decisions that can result in tragedy.
Yep.
And I think that people are going to, as soon as they stop their fixation on what's happening here, they're going to turn their gaze to Virgin Galactic, because the reality is people probably shouldn't, unless they're highly trained and willing to take these risks. This type of adventure, in my opinion, or not adventure, this type of exploration at this level of danger is not a consumer item. I don't think it's a consumer experience, and I don't think it should be.
Yep.
And I just don't think you should have an 18-year-old in a basically a capsule going to the bottom of the ocean. And nor should you have people going into space. I just don't think it, as kind of a tourist thing. So I think this is going to be, if you will, this is really going to shine a light on just how ridiculous, how dangerous this type of exploration is. And I think a lot of people are going to ask for refunds on Virgin Galactic.
And it sort of brings up the point that we've made before, which is like, you can't take anything for granted technology-wise. I mean, every time you get on a plane, you're just assuming that everything's going to be fine. But the only reason that everything's fine is because there are thousands of people, and specifically hundreds of regulators, who are checking the plane, who are making sure that everything is working correctly. They've written laws and they've got regulatory checks to make sure that no one dies on the thing. And to me, this was sort of a reminder of that again. It's like, we're so used to things working. And the only reason that things work is because we make them work, and we have regulation that holds technology responsible and accountable. And this is sort of, to me, kind of a stark reminder of that.
So I'm super into aviation, and I think the FAA and America got it right. It realized that aviation could be this huge unlock for the markets, incredible efficiency. If people are comfortable traveling, we're going to have more mobility of human capital and apply it to its best opportunity. We're going to see global commerce. When an executive needs to be in LA, he or she doesn't think twice about getting on a plane that goes near the speed of sound to get there, and then take off and land in a series of composites and metal that can fly them kind of at the surface of the atmosphere and get them there safely. And what they decided is, in order to ensure this type of liquidity and this unlock, you're going to have to make people feel comfortable and safe doing this. And so the FAA literally says to you, all right, we're going to put in place a series of maintenance standards that are non-negotiable. And it's the equivalent of if someone from the government showed up with a trained mechanic and every 300, 500 miles on your car forced you to change the tires, change the oil, inspected the spark plugs, made you change blinker lights, made you change the electrical system every 18 or 24 months. The FAA so over-engineers the safety standards in a plane, and what they've figured out is, the additional cost is onerous. It is a highly regulated industry. That regulation causes pain, suffering, or it causes a lot of cost and a lot of downtime. The result is we have gone full years globally where there hasn't been a single commercial aviation disaster.
Yep.
And the result is that pretty much every individual in the world is comfortable taking this incredible technology to see their family or grow the economy. This could not be more different. There is no regulation here. There literally is no regulation. No one regulates space so far. And absolutely no one regulates the deep sea water adventure.
Well, there's the space
but I think
agency. I don't know what regulatory role it actually has, but
I'm pretty sure if you and I build a rocket, I don't know, unless we kind of enter what's called FAA space, I think we can pretty much do whatever the fuck we want. And I know that if you and I want to take like a bunch of saran wrap or take a shower curtain and put oxygen in it, or take a Honda Civic or a minivan and crash it into the Atlantic and say we're going to go deep sea diving, I think we can do it. And if we can get on CNBC and say this is a brave new world, and you get to see all these incredible gelatinous iridescent items at the bottom of the ocean, and we're going to get to go see a ship that crashed into an iceberg in 1912 and start selling tickets, I'm not sure, other than legal liability, anything prohibits us from doing that. But distinct to the regulation, I think a lot of people are just going to wake up and go, you know what? The juice here isn't worth the squeeze. The risk isn't worth it, because the Virgin Galactic orbital, or whatever the hell they call it, let me just bring this home to you, Ed. If you took Princeton's endowment and you stacked it in $100 bills, it would be higher than where the Virgin Galactic Orbital 1 travels. The Orbital 1, or whatever it's called, would run into it. So is that worth risking your life? So, one, I think this is a tragedy, but I'm predicting, and I'll come back to this, but it's the end for Virgin Galactic. Tesla, I mean, it's sort of unfair to say it sank 6% because it's been on such a tear. It's added in the last 30 days. It's added the value of GM, Ford, Volkswagen, and throw in Honda and BMW.
Yeah.
I mean, it's added the value of Toyota in the American car industry in the last 30 days. And I was trying to figure out what has driven this incredible acceleration in the value of Tesla. And I'm trying to rationalize it because it has nothing to do with the car. It has nothing to do with the fundamentals. It trades at 50 times EBITDA versus 5 for all the other automobile companies. I reverse engineer it to Satya Nadella's investment in OpenAI, which I think will go down as the greatest corporate VC investment of all time. And AI has unlocked this new hope that the tech markets might go on a tear again. And people are looking for kind of AI-ish, tech-ish, unicorn-ish, exciting companies that have sort of detached from all fundamentals of reality to get on a rocket ship, if you will. And everybody's favorite kind of irrational investment that is an amazing company with amazing products that has kind of an AI-ish feel to it through autonomous driving is Tesla. And I think there was a lot of capital on the sidelines thinking that maybe we'll take a wait-and-see attitude in the equity markets. And now they're thinking, I don't want to miss out on this recent AI unlock or boom, because its multiple, yet again, makes abso-fucking-lutely no sense. SoftBank founder and CEO Masayoshi Son, I don't know, he's slept off the hangover and is back. This guy, he is the luckiest investor in history. He invested, I think, $20 million in Alibaba and got a $50 billion back. And so people assumed, oh, he's not lucky, he's a genius. No, he's just really fucking lucky. I think he's literally taking money into the street and burning it. I think he has the same meth dealer as Cathie Wood. I think these individuals make no sense whatsoever when you hear them talk about their stocks.
Yeah.
So I think that SoftBank is nothing but a vessel to transfer money from the Kingdom of Saudi Arabia back to America. I think that Masayoshi Son is a CIA operative who is transferring capital back from the kingdom to America. That's my tinfoil hat conspiracy notion. And then OpenAI launching an app store. I think it's a great idea. I hadn't thought of it. I don't understand what their advantage would be over the dominant monopoly in apps, and that is Apple. What makes OpenAI any more appealing for an app store or for an AI app than Apple? Do you have any thoughts?
Well, I think it's a platform for AI models, like large language models and their applications. We've been talking about all of the different AI use cases that we've been looking at. We've been looking at AI models that you can use to clip videos and post them on TikTok. We've been looking at AI models that maybe even translate our voices into different languages or add subtitles. It would basically just be a platform that aggregates all of those products in one place. I would love to go to a sort of clean UI where I just check out the latest new AI products. I mean, we're constantly talking about like, oh, we should be on top of AI. We should know what the new products are. Well, this would solve our problem, right? Just a dashboard. It's like, here are the top 10 AI model applications that have been downloaded today. You should check them out. And reviews on those models too. Okay, let's move on to our first story. New home construction, a key indicator of economic sentiment, has been in a year-long slump. Back in 2021, almost 2 million homes were constructed each month. This year, though, that number's been closer to 1.4 million, and economists have expected it to continue to decline. But last month, something strange happened. Data showed 291,000 new homes were constructed in May, a 22% increase from April. That's the largest percentage increase since 2016, and the largest absolute increase in more than 3 decades. Meanwhile, home builder sentiment has advanced to an 11-month high. So, Scott, the housing market is still hot. There's low inventory and home prices are still hovering near all-time highs. But this seems like a positive forward-looking indicator for the market, right?
Yeah, it's striking. I spoke to a Goldman analyst today. It's striking how resilient the home builders have been.
Right.
And what you have is housing prices really haven't budged much. Everyone's been calling for an apocalypse in home prices, thinking once their mortgage had to reset, that you would see a crash in home prices and home values. And it just hasn't happened. It appears that the marginal buyer still wants in, even at a 6 or 7% rate. They have been, I don't know, purposefully or accidentally constraining supply. So there just isn't a lot of supply there. And the home builders, Kaufman Broad, or I don't even know if they're still around, or Pulte have been announcing, incredible earnings. The housing market and the stocks, the home builders, have been surprisingly resilient. I think it's a bad thing. I would like to see a decline or a correction in housing prices. I think it's overdue.
Yeah.
I think people of your generation are having a difficult time getting in. But the reality is, from an incumbent standpoint, it's been good to own housing stocks and good to be a housing company.
Yeah. Yeah, I mean, it's interesting how the home construction is just completely reverse engineered to prices, because you look at housing prices, they're still extremely high. It's around $390,000 for a median existing home. And the reason for that is it's just a supply and demand problem where there are not enough homes. Existing home sales are down almost 25% from a year ago. And it all begins with, we're not building enough homes in America. So I guess my question to you is, why do you think that is? Why aren't people building homes?
America has entered a projectionist luxury mindset, kind of a NIMBYist mindset. And that is, once I have a college degree, I want to make it harder for people to get in, because that means that my value of my degree will go up.
Yeah.
Once I own a home, I show up to the local review board and come up with good reasons why we shouldn't approve that new housing development. And once I have a tech company, I spend a bunch of money on lobbyists to try and make it more difficult for new entrants, whether it's licensing or if I'm a university, I do something called accreditation, which is run by the incumbents that makes it difficult for new. I mean, the number of new universities has grown 0.4% a year. They have constricted supply, and universities, including especially Princeton, have ensured that despite these massive endowments, they don't want to offer that incredible opportunity. I mean, if you think about higher education, what if you had a drug that if you gave to somebody, it cut in half the risks of suicide, heart disease, diabetes, obesity, depression? They lived longer, they made more money, they could take care of their parents. Just this one pill. That one pill is called higher education, but we've decided to sequester that medication, that pharmaceutical, to 1/4 of our population at most, and elite colleges to maybe 3 or 5% of our population. It's morally corrupt. We are entering into, we have discovered, our nation has decided to pursue an LVMH-like strategy and employ scarcity. And the same is true in housing. We have so much zoning and permit constraints that it is very difficult. And I know this is someone who has tried to develop property, even in what is considered landlord or builder-friendly Florida. It's near impossible to build new housing because the incumbents have a vested interest in ensuring that new houses don't get built. So what does that mean? It means that when I graduated from business school in 92, in 1994, I bought a home in San Francisco for $285,000, which was, I was making $100,000 a year, or my offer out of school was $100,000. So I could buy a house in San Francisco for 2.85 times my MBA salary. I would bet an MBA salary now at the Haas School of Business is $150,000. I would bet the average house is $2 million. So it's gone from, and I'm guessing it's gone from 2.8 to 12x. And that's just not sustainable. That means that people don't put down roots. They don't start saving money. They don't start families. So this is a real problem. I'd like to see some sort of statewide or federal legislation that says you can't hold up housing. And I don't know. I don't know how you do that. Florida tried to pass a law that made it more difficult to get in the way of new housing permits, and the local housing boards just stuck up the middle finger and said, sue us, and they continue to do it. But it's a NIMBYist LVMH-like bullshit rejectionist culture that is taking up housing prices.
So those local housing boards, I assume it's just local residents. I mean, when we talk about how do we fix this problem, is it just going to have to be some sort of grassroots political movement where you convince these local residential housing boards that it's in the best interests of America to loosen up on housing permits? How do we even begin to fix this problem?
There was something pretty innovative in Florida, actually, and that is a developer or a builder actually incorporated a city out in kind of a little bit inland. They essentially incorporated a city and said, okay, we are now the leadership or the council or the local government for what is now a city, solely such that people couldn't get in the way. And they're going to build tens of thousands of units. So, the market, you like to think the invisible hand here will come in, but I do think there needs to be regulation that says, look, if you can't prove that the city is hugely impacted, that it's going to have some sort of crazy, you got to err on the side of creating affordable housing. Just that we should have laws that create a bias towards new building, not against it. And I don't know the best execution of that. But it is becoming an existential threat for young people. The majority of older people that build wealth through housing, they have, this is their retirement. It was my mom's retirement. It's forced savings. It's pride of ownership. It's, I think it's good for your mental health to have a home. A lot of economists would argue that over time, when you look at maintenance and insurance, it's not a good economic deal. I think that's bullshit. I think it's a lot of psychic return from owning a home. And the fact that we have yet again, taken another asset class, and I think it's the largest asset class in America. I think it's bigger. I don't know if it's bigger than stocks. It's either one or two, residential real estate, and sequestered it to the incumbents or the children of rich people. It's just, again, this is not America. It's not an America we want or that we recognize. And home ownership among young adults, age 25 to 34, was at 41.6% in 2021, down from 45% in 1990. 12.5% of this group lived with their parents in 1990. In 2021, it's now 20% of them. So, be careful, parents, about showing up to your housing board. It means that your son's going to be living with you until he's 40.
Yeah. No, exactly. And then finally, we should probably tie this back to macroeconomics. This was considered a good thing for Jerome Powell. It's an indication that the housing market is stabilizing. It's a roundabout way of saying this all sort of has to do with interest rates. Specifically, interest rate hikes were supposed to bring housing prices down, and this is an indication that maybe the housing supply will begin to bring prices down. But could you explain what the dynamic is between interest rates in general, and the housing market? Specifically, how do interest rates affect the housing market?
It's pretty basic. If your mortgage goes from 3% to 6%, your monthly mortgage rate is going to go up by 50%.
Yep.
And that's going to crowd out spending on other things. And it's also the first-time buyer that did the math and went to a bank and said, we have this much down payment and we have this much income and we can support this kind of much monthly mortgage payment, or we can support a monthly mortgage payment of X. The bank might say to them, okay, you can afford a $600,000 house. That was 2 years ago. That same couple can afford a house that's $400,000 now. So you would think that would pull down the prices of houses. But what's happened is there's been this artificial constraint on supply because people have such great mortgages. They're afraid to move, so they're not putting on their house on the market. I mean, something that's interesting, and the market's so creative here, is that investors and real estate agents are now treating mortgage rates as assets. And that is, Redfin has noticed a sharp increase in listings that are essentially selling mortgage rates from several years ago by transferring them to new buyers. So what they're saying is, let's structure a deal such that you take over my payments, and when the mortgage needs to be refinanced in 3 years or 4 years, you then have to buy me out. But until then, you're getting a below market mortgage, which means you can afford more house. And so essentially people are trying to monetize the low interest rates they have on their houses while entering into an agreement to sell their house. Also, it just appears people have built up a lot of equity in their house and don't feel there's no forced selling. So there's very little price discovery. You also have buyers who feel like they should be getting a deal, and you have sellers who aren't willing to offer a deal, and they don't feel an urgency or a sense of urgency to move because they have some money saved up, they have some equity in their house. The resilience of the housing market could best be described as shocking.
Well, hopefully this new data will be the beginning of the reversal of that trend. We'll keep tabs on it. Let's move on to our second story. A potential strike is brewing at UPS, and a significant piece of the US supply chain is at stake. UPS workers are pushing for improved safety measures, higher wages, and more manageable shifts. The Teamsters Union, which represents 340,000 of them, voted to authorize the strike if it can't reach an agreement before the end of July. Should UPS workers walk out, it will be the largest single employer strike in US history, and a quarter of the delivery market will be on hold or diverted to UPS's competitors. This strike also comes at a challenging time for the entire sector. Both UPS and FedEx recently reported revenue decreases of 6% and 10% respectively, and both cited macroeconomic issues and weakening consumer demand. But it appears FedEx has done a better job weathering those conditions and could be poised to benefit from this strike. FedEx stock is up nearly 30% year to date, while UPS stock is down around 1%. Scott, what's your initial reaction to this news?
So the market share of parcel volume for the four biggest players is the United States Postal Service has about a third of the market, 32%, UPS 24%, Amazon 23%, FedEx at 19%. So there's a number of players here, which you would think, okay, do the workers have power? And if they can, it does feel, unlike the writer strike where it's a gift to the studios who all need to recalibrate down their costs because they're in a shitty business right now, mostly chasing Netflix. So they're fine with a pause in spending, a multilateral pause in spending forced by the Writers Guild. It strikes me that there's incentive on both ends here to figure this out.
Yeah.
Because if my Netflix queue is several hundred hours deep, meaning that Netflix is in no danger. The $12 I give to Netflix a month is not a risk.
Yep.
If UPS can no longer, pick up and ship stuff for me, that tap gets turned off. I'm not going to continue to pay them. It's not like they can bank shipping capacity. And so it strikes me that there's so much incentive on behalf of everybody to try and figure this out that I think I would bet this gets solved. And I don't think, I mean, I would imagine maybe the union wants to send a strong message. I remember the last time there was a strike, the union put out all these images of a UPS truck that had flipped over, saying, that the scab, the strike busting driver who didn't know what he was doing, crashed a semi. But I think this gets figured out. Ed, do you have any thoughts here?
Well, the thing that struck me is just how essential UPS is to the economy. I mean, some stats: UPS carries 1 in 4 packages in America, handles 24 million packages a day, and the company says it transports 6% of US GDP on its trucks every day. And the thing that is more surprising to me is the fact that it's not really getting that much coverage. I mean, the major news stories of the past few days have been, one, a billionaire submarine, which is what we opened this podcast talking about, and two, FTC suing Amazon for, manipulating its customers. But this, to me, from a pure weight of the economic effect perspective, this to me is the story. So, I mean, my question to you, am I missing something, or would this strike, if it goes through, not basically completely cripple our economy?
I think there are substitutes. So the last mile, it used to be, when I started Red Envelope, fulfillment and delivery was simple. It was just try and get it there, not too fucked up and damaged and dented and screwed up. Right. Try and get it there within 7 days for the lowest price possible. Yeah. And to get a $10, box or can of chocolate-covered almonds overnight somewhere would cost you $50 in shipping. Mm-hmm. And then Amazon came in and basically said shipping is a feature, not a bug. Mm-hmm. And if we offer everyone 48 hours free delivery, it'll be this, we're going to turn operations from a cost center to a point of differentiation. And they massively overinvest. And then Bezos zigged while everyone was zagged and made massive investments in last mile delivery. And, not overnight, but in the course of, less than probably a decade or a decade and a half, is now just 1 percentage point behind UPS and has a greater share of last mile shipping than FedEx. So there are more options now. And that is, I'm not sure UPS can shut down the economy. Mm-hmm. But at the same time, this strike could probably put UPS not out of business, but really, really make it an ugly year for them. Yeah. So it strikes me, no pun intended, that both sides want to figure this out, because I don't know how transferable these jobs are. I don't know, will the other guys try and take advantage of this and grab share? Yeah. If you want to know how strong consumer appetite is, just look at so far their earnings. FedEx posted its third straight quarterly drop in revenue. UPS posted its second consecutive quarterly decline. They just don't, so the argument is, are they doing poorly and they need to send a signal to their labor force that they're just not going to increase their wages? Mm-hmm. Or are they really vulnerable? And that's the question. I don't have an answer. I don't understand the dynamics here between labor and substitutes in the shipping market.
By the way, what was Amazon up to when you were starting Red Envelope? I hadn't really considered the fact that you were basically going head to head with Bezos back in like 99 and
what Amazon was doing, I started Red Envelope in 1997. Amazon was selling CDs and books. Yeah. They weren't in this business. I think they were using the same shitty fulfillment we were using.
What was Red Envelope's niche? Was it?
We did gifts.
Everything?
We did gifts, Ed. Maybe you should do some research on the person who signs the front of your checks, bitch. Jesus Christ. Have you met me? I started an amazing e-commerce company. It should have been me on a yacht outside of Cannes taking pictures of my girlfriend in a thong.
Yeah, that's what I've interrogated.
That should have been me, Ed. That should have been me flying into space with William Shatner. That could have been me. Jeff Bezos is not my astronaut, Ed. Sally Ride 4 days ago, was the first woman to shatter the orbital ceiling. The daughter of a minister, PhD in physics from Stanford, the youngest person in space at the time, 32 years of age, tragically died of pancreatic cancer, and as far as we know, the first gay woman in space. She is my astronaut. She is my astronaut, not Jeff Bezos. But anyway, it's back to 1997. They weren't in fulfillment. They didn't figure that out yet.
And just to tie this back to FedEx, I mean, the stock performance of these two companies, UPS is a massive company. It's like almost $150 billion market cap. But the stock performance so far this year has been drastically different. So FedEx is up 34%. That's compared to the S&P 500, which is up 14%. And UPS has declined 1%. How do we account for those differences? What's happening there?
So FedEx has made the market likes FedEx's moves in response to the macroeconomic slowdown. The Memphis Giant, I like the way I incorporated that. I made that up. It's combining its express and ground delivery networks into a single business to cut costs. And they've also deployed cost-saving measures that include fewer flight hours, higher rates for shipping to offset the post-pandemic decline in shipping volume. And over the last 10 years, FedEx has raised its dividend by an average of 26 per year compared to UPS's 10% a year. Meanwhile, UPS appears to be stuck dealing with labor negotiations. So FedEx and other carriers have encouraged shippers to switch from UPS for months in order to avoid delays. They're using scare tactics. What if they go on strike? So they're taking advantage of that. Yep. And FedEx appears to be more innovative, or at least that's the reputation they have right now. It's published 29 patents since 2019 compared to UPS's 12. And FedEx just feels more, I hate to use this word, more Tesla-like right now, more kind of, I don't know, more innovative, more resilient, and the market is responding.
Okay, let's move on to our third story. AI is the facelift many tech stocks have been waiting for. Since the beginning of the year, the NASDAQ Tech Index has risen 35%. But there's one tech stock in particular that's especially benefiting from the hype cycle, and that's Adobe. Year to date, Adobe is up more than 40%. And in the past 3 months alone, the company has added $48 billion in shareholder value. Now, strong financials are part of it. 2 weeks ago, Adobe reported better than expected earnings that lifted the stock 3% on the announcement. But what investors are really interested in is Adobe's implementation of AI. So in March, the company announced several AI initiatives, most notably an image and ad video generation tool called Firefly. Within a month, Adobe struck a deal with Google to incorporate Firefly into Google's own AI chatbot called Bard. And per Goldman Sachs Equity Research, this, quote, shifted the narrative squarely on AI and highlighted Adobe's potential to be a key beneficiary. So, Scott, last time we discussed Adobe, it had announced a $20 billion acquisition of the design app Figma. That was the largest private tech buyout of all time. Investors took that as a sign that the company was struggling to innovate, though, and the stock fell. But now the narrative has completely reversed with this AI wave. Does any of this surprise you at all?
This is a case study in how to leverage AI as opposed to getting, blindsided by it. And if you look at a lot of the education stocks that have said that AI might hurt us, they've gotten taken down 50, 60%. Adobe could have easily been roadkill here. A generative AI or a design AI could have come out, and if Adobe had said, we're investing here, but it'll probably said it's impacting our business, Adobe could have got cut in half. It could have been half, but instead, they really leaned into this early, and you have to give them credit. They were out in front of this.
Yeah.
And Firefly was not only out in front investing in design or generative AI design. Adobe was one of the first to really have incorporated AI with Firefly. And what I think was really innovative or visionary is that they saw that IP and who gets paid and whatever design informs these generative AI models technically would create problems, as in who owns the content that's submitted or that these LLMs learn from, or that these design AI models learn from. And they got out in front of that and only had design that they either have ownership of the intellectual property, they own the rights to it, or they have licensed it. So when you use Firefly, you know that you're clean. You know you're not going to be caught up in some lawsuit. And so they got out ahead of this thing and they said, okay, we're gonna tame this horse, not get run over by it. And the result is the stock has gone up dramatic. Adobe's stock price increase is, who cares about Figma at this point? They've gotten out ahead on AI, and it's a perfect example of a visionary. I mean, this is arguably next to Microsoft. Adobe's investment in AI is probably the most innovative or most forward-leaning corporate venture capital or corporate investment of 2023.
Yeah.
And I was thinking about who's really benefited from AI, and Adobe would be right up there. What they've done here is nothing short of visionary.
Yeah. Yeah, I mean, you look at its valuation, its EV/EBITDA ratio is 31x. You compare that to competitors, Oracle's 22, Microsoft's 25, Google's 17. If you look at their EV to ARR ratio, that's annualized recurring revenue, which makes sense because this is a SaaS business. It's 10.7x, and the median across all US SaaS firms is 7.7. So I guess the question is, how substantive is that AI investment? How much of it is narrative? It's clear that AI is driving the stock increase, but I do wonder how substantive really is that AI investment. I guess the Firefly deal with Google is a forward-looking indicator. But I do want to pivot to Figma. And the recent news with Figma is that the European Union is preparing to launch an investigation into that acquisition. And this is apparently it's what's called a phase 2 investigation, which supposedly will take many more months. It's a far more onerous investigation. Meanwhile, the Department of Justice is preparing a lawsuit to block that deal. Do you think that deal will go through? And do you think it will impact Adobe as a company and the stock?
I don't think it's going to go through. And I don't think it matters.
You're right.
I think they're onto something bigger and better. I don't know what the breakup fee is here, but I think it's sort of like Figma schmigma. We figured something cooler out.
Yeah.
And of course, my ultimate market validation is my 12-year-old son is using Firefly. So I assume this thing's everywhere.
Nice.
And I think they're going to double down on this. I think they mentioned in their earnings call, Adobe mentioned AI 30 times in their most recent earnings call. And the revenue increased 10% year on year. EPS increased 17%, while operating margin declined only 1%. Over the past 3 years, the company has grown revenue at a CAGR of 17 or I think like 16.4%. I mean, Adobe is arguably the best run company you don't hear much about.
Yeah.
I'm blown away by Adobe, Ed.
Yeah.
I'm totally blown away by Adobe. I partied the VIP room with Adobe the other day. I think they're incredible. So real quickly, let's talk about other companies that have really, their stocks have really benefited, or companies from AI. I would say Adobe's right up there. Obviously, Microsoft, visionary investment in OpenAI. People don't talk about it, and I hate to admit it, but Meta's stock rocket screamer or stock rocket acceleration is kind of on the backs of Reels. People are spending 24% more time over the last year on Instagram because of the success of Reels, and a lot of Reels is powered by AI. I mean, the stuff you get served up and suggested is really powerful. And then I think you'd have to say that, and then of course, NVIDIA. NVIDIA, built these, designed and built these graphic process units for video games, and it ends up that same technology is just the gangster technology for AI, and has breached, I think it's the 7th company in history to breach $1 trillion. By the way, Ed, and I know you take a special interest in this, I spoke at WPP Beach, and the person who spoke after me was this guy, Jensen Huang.
Oh, nice. CEO Jensen Huang. He always wears a leather jacket. He has an NVIDIA tattoo on his arm. He's got this massive Reddit following, the next storyteller CEO. Was he wearing the jacket?
He came up to me and said, "I love your videos."
Oh, wow.
And I said, "Oh, it's a fan." I said, "Do you want to take a picture?" And he kind of stopped and said, "Sure." And someone came up to me and was like, "That's the CEO of NVIDIA."
He's a really CEO in the world.
100%. But he said something really interesting. He said, everyone's going to have a digital twin, which I thought was really interesting.
Yep.
And that everyone should own the rights to their digital twin. It shouldn't be... No one should be able to make a digital twin of you that can be used for money that you don't participate in. I thought he was a very thoughtful, pretty interesting guy. And then the guy who spoke after him was the co-CEO of Netflix, Greg Peters. I think Greg Peters and Ted Sarandos are the strongest co-CEOs in the world. There's not that many co-CEOs. But the two of them and Reed Hastings are all in their 50s. They all have amazing hair. And the likelihood of being a guy in your 50s with amazing hair is like 1 in 100. So that means it's literally a 1 in a million chance you would have 3 leaders with great hair, and I think that they are follicleists. I think they are bigoted against people without hair, and I think that is totally inappropriate. Anyways, that's my hair joke. But I spoke before the CEOs of NVIDIA and the co-CEO of Netflix. So that means I'm important and relevant, Ed. I'm important and relevant. Okay, what else? What's going on next week?
Let's take a look at the week ahead. We've got earnings from Nike, Walgreens, General Mills, and Constellation Brands. And we'll see the personal consumption expenditures index for May, as well as data on new and pending home sales. Do you have any predictions for us?
Well, it's the one I made during this show. Virgin Galactic actually had a bit of a dead cat bounce. It was up, I think, 20 or 25% last week on the announcement of their first commercial flight. And I think this entire category just makes no sense. And in addition to it being just a shitty business that is both supply and demand constrained, I think the entire market is going to rethink and realize that space tourism is not a thing. There's space exploration, which is space execution. Although I do hope that Elon Musk is the first person on Mars. That makes no sense. Space tourism is just not a thing. Never should have been a thing. And I think we're going to rethink a lot of, we're going to rethink what it means. What are real decisions and who should be allowed to go on these incredibly dangerous missions, if you will. And the business that does work is space hauling, but that's another talk show. But look for Virgin Galactic to be sub $1, I think, in the next 12 months. Highly strained. Business makes no sense.
Yeah, good stuff.
Thank you for watching this version of Prof G Markets. Check out our pod feed for office hours on Wednesday, and we'll be back with a fresh take on markets every Monday.